Hi, this is Alessio Rastani of Leading Trader. Welcome to this update on the British pound. Now, as you probably heard by now, there's a lot of speculations and uncertainties as to whether the UK will stay or leave the European Union come the referendum in June. This is what's often called as Brexit, which is the word that's scaring a lot of people in the financial industry. Now, I want to show you in this video what our outlook is on the British pound for the next few weeks and potentially months to come. And I'm going to look at it from a technical perspective. What you see here on my chart are essentially what's called Elliott waves on the British pound. Now, let me just explain to you very briefly what we mean by Elliott waves, because some of you may not be familiar with this term or what indeed Elliott waves are. Essentially, Elliott wave theory simply says that markets tend to trend in 5 sections or 5 waves. And essentially in a downward trend, when the market is in a downward trend, you will see the market making this kind of pattern as you see here. This is wave 1, wave 2, wave 3. Wave 3 tends to be the longest wave, and then we got wave 4, which is a corrective wave, and then wave 5, the final wave in the trend. And as you can see here on my chart of the British pound, we can see a similar wave pattern on the British pound on the daily chart. So as you can see here, that over here, okay, let me just get my pen here. That here was our wave 1, then wave 2, which completed back in the October-November period of last year. Then we had this strong move lower, our wave 3, followed by a corrective wave 4, usually a profit-taking wave. And when we say a profit-taking wave, what we mean by that is that people who were short on the British pound, they're betting against the British pound, essentially are covering their positions, causing a short covering rally that you see here in this wave 4. And then we see the final wave, what's called wave 5, coming into action. And I believe we're coming through into wave 5. Now, I don't believe wave 5 actually is over yet, and it depends on certain things, which I'll show you in this video. So let me just bring this back a little bit here. And what you will see is that there's a potential wave 5 target right underneath where we are right now. In fact, that level you see there at 1.35 is an important level. Why? Because if you look at the monthly chart, let's take a look at the monthly chart of the British pound. So we're going back as far as 2007, 2006. And as you can see here, back in 2008, 2009, the British pound made a bottom here. Very significant bottom at the 1.35 level there. We're currently right now above that at the 1.41 level there. So it's quite possible the British pound could continue to sell off into that support at the 1.35 level in the months to come. Now let's just go back to that daily chart. And what you see on that daily chart is this. Personally, I see 2 potential outcomes for the British pound in the weeks and months to come, which is, firstly, we could see some further sideways action in the British pound. And by that, what I mean is, we could see the British pound bouncing off this support level, coming back up to test some resistance at the 1.46, 1.45 level, and just going, sideways for a while before making that next plunge lower. So what I'm looking for is potential sideways or downside action in the British pound in the weeks or months to come. Now, that depends on if we can break this level or not. What I mean by that is if we just squeeze this chart a little bit and bring it up a bit higher a bit, there is another way you can look at this. And essentially what that means is if we see the British pound in the next coming days, if we see it closing below support, currently support is sitting at just below the 1.41 level here at these January lows. If we can take out and close below the January lows, sitting here about 1.408 or 1.41, then it makes it much more likely we'll head down to the next support level at the psychological level of 1.4. And if we can take out 1.4, I think we're most likely heading down to 1.37 to 1.35. So I do think the uncertainties and fear gathering in the UK about whether the UK will leave the euro or what's called a Brexit certainly could put further downside pressure on the British pound. There are 2 ways we can trade this, and let me just show you that. The first way is to wait for a pullback and then short the pullback. So what I mean by that is that what we can do is draw a trend line connecting the previous highs like that, okay? And then any pullback, any rallies or pullback to that trend line, that level you see there, which is at 1.44 to potentially 1.45, that can be shorted. And then let's see if we can hold that resistance level and head down to our next wave 5 target, which is sitting below the January lows. The other way to trade this, wait for a close below support So a close below the January lows or below 1.408, and then short the next pullback to the breakout point. Okay, so pull back to 1.41 or 1.408, and then let's see if we can continue this downward trend lower to our next wave 5 targets. For more up-to-date market forecasts and trading strategies, feel free to join us on this link you see here. It is leadingtrader.com/alerts. Thank you very much indeed, and I'll see you on the next video.